Okay, guys, gotta learn to stop saying all the time. Another trade breakdown, which I promised a couple of days ago. Been a busy week, so apologies for being a bit delayed. This is from Wednesday, and we were speaking in the chat. It was a day where I wasn't around for New York Open, which was a blessing in disguise. So looking at a bear chart, then that's all we've got, as you should know by now. My timings are all marked out that way. I have changed this a little bit as well. And I've also changed the way the Asian session looks because a couple of good friends of mine are trading Asia now. But anyway, I wanted to go over this because a question was asked or I meant posed a question, I should say, in the chat regarding engineered buy-side liquidity and how important it can be, what a good asset it is. So I'm just going to play through this slowly. And bear in mind, I was out at the time that all this was going on. I got back in sort of early evening, our time here. And that's it, really. So let's just go through it slowly. Right? We're on the 1 minute time frame. Something else I want to stress as well, guys, right, is that even though I use a lot of the 1 minute time frame, I only really use it for entries, nothing else. My analysis has a lot to do with fundamentals and always top down, working from the higher time frames, which is something I'm going to cover off on Sunday on the first class, which is open to all. And then after that, I think I'm going to do them just for traded floor members who, want to take things a little bit further. So, okay, so this is my first point of interest here. Now, prior to this, we had this key support area, which was in play for quite a few days. We had a lot of to and fro in here. Obviously, overall with indices at the moment, we're in a bit of decline, but we are and we aren't. We're sort of going sideways a little bit as well. There's enough movement in here to get good moves, to get good scalps, which you've seen my results on the results channel as well on the server. But this was sort of a key sort of thing. Now, on this occasion, we smashed through it rather than rejecting about 4 or 5 times as we'd done previously. So that was quite interesting. But this is one heck of a move here, which happened in London, which, again, I wish I'd caught, but I didn't. And very often with a big move like this, the first thing to realize is that with a big move, you often get a correction to about 50% of the range. Now, this is another question that come up. What now? So that is a trading range on the 1 minute. What makes it a trading range? But the last high there that took another high, even though in this case, right, those are virtually equal highs, relatively equal highs. I think on the 1 hour and the 4 hour as well, there's another high there. And that's why it was a point of interest. It is the relatively equal highs, which are always a good draw on liquidity, and a massive move away from it. So that's where the move started. So straight away, when I look at a chart, that pops out as, a key sort of point of interest for me. Now, there's two possibilities. If we're going to absolutely tank the market, then, that sort of move down could go on a heck of a lot longer. We're only looking at, say, only, it's a massive move, but we're looking at 500 points there. Now, that could easily double on a market crash in one session. Not usually London, I've got to say. Usually New York, but that would have been a lovely sell-off to catch there. So then the question becomes, is it going to retrace, which could be anywhere up to 50% of the dealing range, which would be that line there, and continue lower? Or is it going to correct the move? Was that move that was caused by something in the fundamentals, which was sort of basically knee-jerk market reaction? Okay, so that's all sort of like pre New York Open, which is the main time that I'll trade to do lives on the server. And the reasoning behind that is there's a very straightforward and easy setup that I'm trying to show you guys, which is a good way to get started. It's not the be all and end all, but the first presented fair value gap is a little gem in of itself. So if you're looking at, to get an easy sort of go-to to kick you off and get some money in the bank and build up your accounts a little bit, it's a decent one, I would say of late, and it does vary. It's not a cast iron rule, but lately the first presented fair value gap has been working 3 or 4 times out of 5 quite consistently for the last 8 to 12 weeks. And a lot of the stuff I post in trade breakdowns revolves around this in an effort to drum it in and make it obvious for you. Okay, so there's all your background information. Right, now what we got here, obviously when I was away, right, that's the first candle of the New York Open. So straight away we've got, a bullish pullback. Now again, we could be going into deep discount here on the dealing range to head lower, or we could be correcting the move. But the way that the first presented value gap has been working lately, I stress that, there's a high probability that that is going to go up here. Now, nothing is guaranteed in trading, ever. It is a game of probabilities. The market will do whatever the market wants to do, and very often it will come along and bite you on the bum if you're a bit clueless. So if you're going to enter from there on that sort of move up, right, then your obvious trade would be from here. Ideally, you wanted to pull back the first presented fair value gap and reject. Now you could have that as a let's go up here. So we're looking at correcting this first move. There's a reason that box is there, which we'll see shortly, right? So that would be a perfect sort of setup, is to come back, touch it again, and reject and leave the fair value gap open. Now currently that isn't even the first presented fair value gap because it's a 3 candle pattern, so you need the third one, right? So that isn't even a trade at the moment, but if that came back there and then shot up again, bosh, you're in an entry. Now you shouldn't go below that, but that first presented fair value gap is pretty, it's pretty tiny really, to what some of them can be. So you'd want to go at least to there, possibly there, or possibly even down here, right, which would make your risk to reward a lot less. But with stop losses, safety in mind, you can always move your stop loss up if it starts going your direction, just to safeguard any gains that you might be making. So the next candle, which gives us not the first presented fair value gap, actually is in there, right? So is that actually a first presented fair value gap? I've got this right. Yeah, it is. So there's your first presented fair value gap, right? Now again, ideally, we'd like you to come back down here to give us a better risk reward. There to there, it ain't all that, guys. Do you know what I mean? You're looking at not very far to travel there. So I can't remember how it played out now, but let's have a look. Yeah, it's gone up, right? So again, you've got a 3 candle pattern there, which is bullish. And this is another order block, potentially. Right? All an order block is a little bit of resistance. Don't overcomplicate it. This here is an order block. It's another question I've had a couple of times from the new guys. But that potentially is a move up there. Now, what I found works for me lately, now it's an order block, but in order for it to be a confirmed order block, we needed to go above there, as this one has here. That is a change in state of delivery, break a structure out of this order block. And let's see, not closed above it, so not yet. Still not closed above it. Come back down. Oh, now then. Now that Right, it's showing a lot of bullish structure there. Could be a potential entry worth taking, but you'd have to, you know, you don't want to be having a 1 to 125, so you'd have to tighten up on your stop loss there, even to get like a 2R reward, which you can see there, right? So that's potential. And then we've got, no, this now becomes the whole order block, because that's the downward move, or maybe even just this one here. So again, right, if that doesn't come back below there in the next candle, then that could potentially be an entry. Would I go that tight? 271? Probably not. I'd probably go there, and I probably wouldn't even enter that one because there's not much to go off it, you know. So next candle, no, there we go. So the move is looking like at this point in time it's going to complete, right? But did you have an entry? Arguably not on that one, but again, you see how this works. If that had come back down to there, it's a good Welsh saying, isn't it? And then gone up, you know, happy days. But would you bother with that? Would you bother here? Probably not, if I'm honest. And then back down, order block is still holding. We've got two little fair value gaps there which are holding. There's one there, look, which is the top one. Okay, so that's a fair value gap right on the 50% virtually. Might give or take a pip or two. Remember, price isn't perfect. So for all intents and purposes, looks like it's going there to complete the move to our main point of interest, equalize up here. And then this happens. Didn't quite get there. Now, you've seen me on previous videos before, right, saying that this is something that NAS will do on occasion. It will leave behind the last little bit of what you think is going to be the move, right? Now, when it does that, and there's a clear drawn liquidity, which is there, that in itself is the engineered buy side liquidity. What it's doing is it's leaving liquidity there because it hasn't run the stops over here on the sell side. It's just anybody that was in this move here now that trailed their stops down, right? This is retraced now and taken all of those people out. So you'd think that it was going to go there, but on this occasion, the way that it plays out ain't so. Now this price action here is specifically why I was very happy that I did not trade the open. I'm glad I was here because this is nothing but pure chop. Price can't make up which way it wants to go. You've got long candles, green candles, red candles. This is just like a barcode. It's just doing nothing. Now, there is an argument here, or possibility here, that now we've gone below the first presented fair value gap. This then potentially becomes a reclaimed fair value gap to continue the move downwards, which we discussed at the start of this, right? So we've left that. We've reclaimed the first presented fair value gap, which is only just a reference point. That's all it is. It's nothing magical. It doesn't have to work, but it does quite consistently. These two yellow lines here are where this previous key resistance was previously as well. So we've got an overall picture of what's going on, and that's what your job is, right? Is to work out, okay, what you think is probable, you know, more probable than something else. So there's two scenarios here that I would look at. Number one, is it going to be a reclaimed fair value gap, which is just going to dive down and swipe all of this liquidity? Bear in mind that it's left that buy side liquidity there as well. So if we were going to do that, would be a magnet, and this would be a magnet, which is what a drawn liquidity actually is, right? It's nothing fancy. It's just something where you think, you know, price could potentially head there. That's all they are. So this is all the same. Liquidity, liquidity, liquidity. Anybody buying up here which you might well have done if you're in London and you saw this base forming and you saw this potential drawn liquidity up here. These are all now buy stops. So there's every possibility that could run in there. The other scenario is it could go back above there, reclaim it again. Now that it's wiped out all the buyers from here, I'd swipe a bit more liquidity from here and then head back up there. So let's see how that plays out. Oh, look. So it's very tempting to get back in there again. I'm thinking you know what's going to happen. You're a mind reader and you know what the market's going to do. But the market's job is to take money off you. That's it. So again, anybody that did sort of fall into that would have been wiped out again potentially. And then, thank God I wasn't on the charts at this time of day. And then, oh, right, we're off to the races now. We've reclaimed the first fair value gap again. This is a day basically where the first fair value gap was not the best. So you could have got in to sell there. So all we're doing now, right, is we've got some idea of what could or may or may not be happening. We've got some ideas based around what is probable or not probable. We've taken a lot of this liquidity here and we're just watching. This is where you need to be super, super patient and see what plays out, see what structure builds. That's what this is. When people say they need to see more structure, what they're saying is they need a bit more clarity because they haven't got a Scooby-Doo what's going on, right? That's what they're saying. So let's have a little look. Candles do see less barcodey here than here, maybe. And we do have, generally speaking, we've got higher highs, lower lows, higher highs, lower lows, higher highs, lower lows. But we made a lower low there. Now suddenly we've made a higher higher here than this one. So instead of continuing down, it now looks like it's going to go back up again. And lo and behold, that's what it does. Now, there's a good bit of bullish movement here, and you can see now that the candles are looking a little bit cleaner. We're back above the first presented fair value gap again, and this will happen. It's not just on the first move of the day that the first presented fair value gap can happen. Price will and can refer back to it multiple times throughout the entire session some days. And that's worth knowing in the back of your mind. Again, there are no hard and fast rules. So I think it was about this time I was getting home, right? So what I am starting to see here is structure. We've had, this is a change in the state of delivery. This whole bundle of red candles here is an order block. So is this one here. So that order block there is held. And if you put that order block in there, which is just resistance, don't make it more complicated than it needs to be, right? Then that's supporting. The first presented fair value gap, that's a confluence. Nice clean candles, bit of friction getting through what is key point of interest again. Nice clean candles pushing up, bit of resistance around all of this chop look that was over here, which is hardly surprising and to be expected, right? It's support and resistance basics, right? But what you do have here, unlike here, is you've got nice clean candles making the moves. Now this is where I think I came home. I sat down and just opened the charts, and I think it was £688 I did this day on this one move here. So a couple more candles there. So what we got is order block, move up, friction, move up, friction. And this here gave me good, a sense of high probability that we're now coming back for this engineered buy side liquidity. very often when it leaves engineered buy side liquidity, it just comes back and it takes it later. That's all it's doing. It's doing this deliberately to take money off people, and then it's eventually coming back and creating the move. Can't remember exactly where I got in here, but I did get in. And let's say we're looking at, I think we were looking at something like this. I had a super tight stop on this because I didn't expect it to come back below that order block. And it was, let's say something like that. I don't know, I can't remember exactly if I'm honest. And yeah, that move there was enough to get me just shy of 700 quid, I think it was. And this is it playing out. And you can see once we start moving up then, we don't come back a great deal there. That's where I got in. We rejected, I remember now. That's where we got in. And I think I targeted a little bit above it. Because usually it'll smash through, right? Let's have a look. Nice clean candles again, and bosh. Up we go. And that's that one. So what you've got here is yet another insight into the first presented fair value gap, which is a nice, easy, simplistic entry model to start working with in your early days to build your confidence up, right? And then a deeper understanding of what's going on with the rest of the price action. And please, please, please don't forget, right, that this is not 1 minute time frame trading. This is execution on the 1 minute that comes from an understanding from the higher time frame, which you should always be using to give you your bias and your narrative. All right, I'm gonna get this uploaded, guys, and then share it with the Trading Flow members.